What if I told you that there's a way to buy a $200,000 house with only $40,000 down? That is exactly what the word leverage is when it comes to real estate investing. Hey everybody, I'm Randy Wolfe, and in this video we're talking about leverage and how using it in real estate can be a really great way to grow your portfolio, but you got to be careful. You got to use it wisely. So let's dive in. Leverage is what makes real estate such a powerful wealth building tool. So that's what we're talking about today, and be sure you stick around to the end because I'm actually going to reveal some of the hidden risk of leverage and how smart investors are actually able to avoid that. Let's talk about the good things. So instead of needing to pay the full price of a property in cash, you can use financing to buy it. So take, for example, a 20% down payment. You can purchase a $200,000 rental for just $40,000 out of pocket. Now the bank provides the other $160,000, and that means you're controlling a six-figure asset with a much smaller investment. Now the magic happens when that property appreciates or produces income. Because here's the thing, if the $200,000 property rises in value to $220,000, that's a $20,000 increase. But since you only invested $40,000, that's a 50% return on your cash. Thank you, leverage. So leverage really is a great thing, but it can definitely cut both ways if you're not careful. Now, if a property, let's say values start to fall, or if you over leverage, the losses can be magnified as well. Over leveraging, which is taking out too much debt, can literally wipe you out if the market shifts or if you have a lot of vacancies that hit. So there's a few things smart investors do in order to use leverage carefully. The first thing is we like to buy assets with positive cash flow. Now, I talk about in some other videos how you can build wealth with, appreciation and, letting time do its thing. But cash flow is something that is going to help you avoid running into problems. So buy assets with positive cash flow. Also, smart investors keep debt at safe levels. Usually this is nowhere more than 70 to 80% loan to value or less. It's even better if you can do a lower loan to value ratio, but certainly that 70 to 80%, you don't really want to go above that in most cases. And also a lot of smart investors maintain reserves to cover payments during tough times. I talk about in some other videos having reserves for things like CapEx and those sort of things, but very important to try to have reserves put back so if things get tight, if you have vacancies, those sort of things, you can still make sure that you are covering that debt. Leverage is about balance, really, when you think about it. It can accelerate your wealth, but it must be managed responsibly. Now, one thing I'll leave you with is leverage can be a double-edged sword. It can absolutely build your empire, or it can totally break it. So be sure when you're thinking about leverage, you use it wisely, and it will become your best ally if you do. Leverage can be a great thing, but you got to use it wisely. Be sure if you want to learn more about how to use leverage or other strategies to where you can build your real estate portfolio, that you subscribe to this channel, you like this video, and if you want a little bit more, check out my private community. I'll put the link in the description below. At this time right now we're full and we're not having any new members join, but if you get there later after watching this video, maybe in the future, maybe it's open, but if it's not, you can actually sign up on the wait list and we'll let you know once it's available again. As always, thank you so much for watching, and I look forward to seeing you on the next video.